Coming up on Market to Market. North Dakota oil production is booming, but the prosperity is not without problems. And an Iraq War veteran embarks on a new mission to fulfill his agricultural dream. Those stories and market analysis with Don Roose next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, April 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Despite unseasonable weather in much of the nation this week, winter is slowly loosening its grip on America and its economy. According to the Commerce Department, retail sales rose by 1.1% in March. That's the largest increase in 18 months, and it was driven primarily by a 3.1% spike in auto sales. General merchandise sales, which include transactions at department stores and big retailers like Walmart and Target, increased 1.9% in their strongest single-month gain in 7 years. The government also reports that new housing starts climbed 3% from February. But the number of U.S. workers applying for initial unemployment benefits rose last week to 304,000. There is one place, however, where unemployment is virtually non-existent. That place, of course, is North Dakota, where an oil boom is fueling unrivaled economic growth. But the prosperity is not without problems. Sometime in the next 2 months, the state of North Dakota will join an exclusive club of states producing 1 million barrels of oil per day. Figures released last week reveal daily production in the Bakken region has topped 950,000 barrels. Only Texas is producing more black gold than North Dakota. But oil production is not the only thing booming in western North Dakota and eastern Montana. Crime is also skyrocketing. Local law enforcement officials say they are overwhelmed as some new residents migrate to the region looking for work, but often find something else.
Middle of winter, icy roads, bald tires. Please God, let me make it. $11.72 in my pocket, but just the hope that there was opportunity there.
Patrick Johnson arrived from the Chicago suburbs searching for a fresh start in the oil-bearing shale that's under thousands of square miles of high plains. Johnson had previous bouts with drugs and alcohol and was fired from his oil rig job after being arrested for drunk driving. Others are coming to the modern-day gold rush and getting involved in more serious crimes of weapons and drug trafficking, including methamphetamine and heroin.
They follow the money.
The number of drug offenses and other crimes has tripled since 2009. The new county jail is already overcrowded. The FBI is planning a permanent office in the region, and ATF plus the DEA have added or diverted resources aimed at fighting crime.
Right now, the place to be in terms of a lot of money flowing around, one of them is Williston, North Dakota.
Local law enforcement, like Williams County Sheriff Scott Bushing, used to know most of the people in this once sleepy area around Williston. But now, like the oil business itself, population and problems are on the rise.
Along with the good folk and the hard workers and people like that come up here, and we have many, many of those, you get the hangers-on, you get the pimps, you get the whores, you get the drug dealers.
Meth is not new here. But officials say mom-and-pop operations were greatly limited by new legislation. Now the drug is coming in from Mexico and in much larger quantities.
Do we have problems? You bet. Does everybody else have problems? Yes, they do. Are we going to come out on top? You damn right.
The sheriff admits life as he knew it before in the Williston area has changed forever. Even shipping the oil from the Bakken is creating problems in other regions. Railroad cars carrying the crude have been the subject of much scrutiny. Two big events, one in Canada in 2013 and the other near Fargo earlier this year, are driving proposed safety changes involving the tankers and the crews that operate them. Senator John Thune wants railroad companies to alleviate the bottleneck of freight cars nationwide. Last week, the South Dakota Republican called on rail companies to plan for the future needs of shippers in the region, especially in light of the projected growth of crude oil production and increased demand for coal, to ensure that all rail shippers receive adequate and efficient rail service. One possible relief for the shortage of rail cars would be the approval of the U.S. route of the Keystone XL pipeline. The 5-year review of the Canada to Texas pipeline has allowed supporters and opponents time to make their cases. Last week, 11 Senate Democrats urged the president to approve the pipeline. The most strident opposition has been in the Cornhusker state, where some residents contend the pipeline will contaminate groundwater and contribute to pollution. And over the weekend, this 80-acre message was completed near Neely in northeast Nebraska. It reads Heartland, #NoKXL. Over the past decade, nearly 1 million rural Americans have served in the U.S. military. But in the current economic climate, returning veterans often face another battle finding gainful employment as civilians. According to the Bureau of Labor Statistics, the unemployment rate among military veterans declined in March to around 9%. Though improving, that's still nearly 2 points higher than the overall national average. But one Iraq War veteran made the transition from warrior to worker by embarking on a new mission to fulfill his agricultural dream. Josh Bittner explains.
Rural America could be considered fertile ground for patriotism. The ties of close-knit communities foster certain sentiments about people, the land, and hard work. And for some, protecting this way of life is more than just an option or an expectation. It's a given.
I was done with high school in 1995. 6 days later, I was standing tall in the yellow footprints at Parris Island, South Carolina for Marine Corps boot camp. My mom was a Marine. And so I told the recruiters I wouldn't sign anything unless they had in writing I could go to Parris Island and graduate from the same place my mom did 20 years prior.
Dan Romus pursued a military career that took him across the globe. But wherever the young Nebraskan was stationed, his thoughts would eventually turn to home.
One of my favorite memories as a child growing up in Lincoln is every other summer. The folks would take me and my younger brother and sister, and we'd go up and visit Grandma and the uncles on the farm in North Dakota. They had chickens roaming about the farmstead, and it was like an Easter egg hunt every day we were out there.
Reminiscing over similar rural traditions helped some homesick troops make it through long deployments.
We could have been talking about playing cards or about any number of things, but the common thread that we had was agriculture.
Once back stateside, Romus's dreams of farm life began to germinate. Stationed in New York State, he struck a deal with a local dairyman to help milk 80 cows in exchange for hunting rights. But the soldier soon found more fulfillment in work than play.
I really enjoyed that. You know, it was early days, long hours, but there's something about working on a farm that I think brings the best out in people because it teaches a very good work ethic.
While he loved agriculture, Romus prioritized his military service and the benefits it could provide. Once his initial commitment to the Marines concluded, he enlisted in the Army and earned a college degree. But while pursuing a master's, the Cornhuskers' educational path took a detour.
I was doing research for about a year and a half before I got the phone call calling me up for a deployment to Iraq.
Shortly after arriving in the war-torn country, Romus commanded a team during a massive troop buildup that came to be known as the Surge.
I was more than happy to answer the same call that my great uncle and grandpa did during World War II, my dad did during the Vietnam War era.
And while the controversial addition of 20,000 American troops in 2007 has been cheered by some for stabilizing Iraq, the long-term impact of such tactics can be a more elusive calculation.
There's always, those invisible wounds. It's very tough on everybody mentally when you lose a couple people, when you see things that the vast majority of the world's population doesn't see. It can be tough to deal with sometimes.
Healthcare and other support for wounded warriors is administered nationwide by the Department of Veterans Affairs. Doctors say for conditions such as post-traumatic stress disorder, engagement is key.
We really hate to see stigma or misconceptions prevent people from seeking treatments. There are effective treatments for it, and getting out with farming and other social activities is one piece of effective treatment for PTSD.
When I'm out here, it's a way for me to detach or forget about everything outside these walls, outside of this farm. It keeps me busy, it keeps me active, and it helps me to move on.
Owning his own agricultural operation turned out to be just what the doctor ordered for Romus. And by networking through the VA, he found a variety of state agencies and other groups that help veterans realize their entrepreneurial dreams.
There's a good financial reason for doing what I'm doing now. It's a low startup cost, starting up a small poultry operation, compared to wanting to start up a dairy farm. Then there's the memories as a kid, gathering up the eggs, being around the chickens on the farm in North Dakota.
I think it's been a great help for him to have him feel busy and be something that he's interested in and something that can be a service to other people.
A $6,000 grant and a $35,000 microloan covered the startup costs for Romus's Prairie Pride Poultry. And now 3 coops on 3 acres of land outside York, Nebraska, house a flock of 600 Rhode Island Reds. The winter-hardy breed was able to withstand the frigid weather and began producing eggs early this year.
Our motto here at Prairie Pride Poultry is happy hens lay healthy eggs.
Embracing a strategy of sustainability, Romus's free-range chickens aren't fed antibiotics or hormones, and they're given the space to roam and eat grass and bugs. Sticking to his values has allowed the veterans' operation to produce an economically viable product.
We want our business plan to be a true roadmap for business success.
Business specialist Carol Blood of Nebraska Self-Employment Services gave the green light to Prairie Pride Poultry. But Blood pulls no punches with disabled veterans and is quick to note the pitfalls and potential of being their own boss. Romus continues to receive business advice from the agency, which boasts an impressive track record in assessing the feasibility of new ventures.
Our success rate is around 71%. National success rate for people without disabilities, about 33%, so almost 3 times the national average.
And that success resonates with Prairie Pride Poultry. Dan Romus's hard work has garnered national recognition via point-of-sale branding on products produced by veteran farmers. And he has advice for fellow veterans considering a career in agriculture.
Hey, chick, chick. Hey, chick, chick.
You have to go out and meet them halfway. You have to seek it out, do your research, be diligent, and keep at it. There they come. And when you knock on their door, they're going to open it, and they're going to help you. And I'm living proof of that. They opened the door when I went knocking.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
Commodity markets were closed during the final session this week in honor of Good Friday. Nevertheless, wheat prices rallied significantly. For the abbreviated trading week, May wheat gained 25 cents, while the nearby corn contract moved nearly 4 cents lower. Tight supplies and strong demand supported soybeans again this week as the May contract gained 51 cents. Nearby meal followed suit with an upward move of $15.40 per ton. In the softs, cotton recovered about a third of last week's loss as the May contract gained $1.15 per hundredweight. In the dairy market, May Class 3 milk gained 81 cents, while the deferred contract improved by 47 cents per hundred. Livestock prices took a breather from their record run this week as the June cattle contract lost $1.40. Nearby feeders were off more than $2, but the big story again this week was in the pork sector, where the June lean hog contract gained $3.60. In the financials, the euro lost 7 basis points against the dollar. Crude oil rose 56 cents per barrel. COMEX gold lost $25 per ounce, and the Goldman Sachs Commodity Index advanced by nearly 10 points to settle at 661.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Mike.
This week we have seen a continuing rally in the wheat markets. Talk to us a little bit about what's going on there. Are we strictly looking at crop condition? Is that what's driving this?
Well, I think you have to look back to the crop report that we had in April, and we actually had a negative reaction, a negative crop report. And I think when you look into the May report, we're probably going to have a negative world-ending production estimate, probably from 180 million metric tons to 200. But I think a lot of the push to the upside this week was really Ukrainian tension. So I think that's what it was, and a rush to a little bit of short covering.
Okay. Now, as we keep that in mind, as we look at a potentially significantly lower May number, where are we at on wheat today? Is this a selling opportunity as we see this rally, or does this represent a buying opportunity for folks with the idea that we could see reduced supplies?
No, I think when you look at it, Mike, I think what we really have is we're probably at the top end of the range. We pushed up to some levels. I think you have to remember we're not that far away from harvest, and we've got a lot of bullish news already dialed into the market. So we think when you look at the July wheat, just up around the 710, 720 indicates that we're probably at a mature level. And we expect that the market probably doesn't fall under 650 on July wheat until after we ease the tensions in Ukraine.
Okay. And it doesn't look like that's going to be happening anytime soon with the increasing developments this week on the Ukrainian situation.
Yeah, you just don't know. So I think it's a moving target. But I think we also have to remember out of that Black Sea region, that's that whole area is the third largest grain exporter in the world. So it is a significant area.
And has planting started over there? Has been proceeding as expected in the Ukraine?
Yeah, that's the good news is the export pace has not been affected, and it looks like the planting progress is going to be unaffected, the seeding rates.
Okay. All right. Well, now let's take a look at the corn market. Despite the rally in corn, did not do anything to pull, despite the rally in wheat, did not do anything to pull the corn market up, basically unchanged this week. Where are we at on corn?
Yeah, Mike, and I tell you, that's the real issue, is the corn market since the 1st of April has just been treading water. We haven't done anything. We've just gone sideways while the soybean market has moved higher on the tight supplies. The wheat market has moved higher on the Ukrainian situation. And I think what it tells us the maturity of the market. We think that to end the week, the market closed technically poor. It's a bad sign. If we get the all-clear signal on the weather next week, which it looks like the weather's improving, we probably have socked in an intermediate high. Selling opportunities have been up around this 510, 515 on Dees wheat, and the same thing on July wheat, or July corn, sorry.
On July corn. So as we look to the future, if we get clear weather, if we see the planters get started here in this next week, we'll probably see a bit of a sell-off. Then, if folks haven't made many sales so far, do you sell into any weather rallies as we roll through the spring, or do you wait until a little farther in the season?
Well, I think when you look at it, this was probably our first weather rally that we've had, a little bit of a concern right now. But I think you really have to gauge yourself because, probably 2 months ago we didn't think we'd be at these levels. And so it's been, a pleasant surprise. But we also have the development of El Nino, and it looks like that could be kicking in pretty aggressively, which means the end of June, the weather turns more favorable to growing conditions. So, fortunately, unfortunately, how many weather scares are you going to get? We may not get as many as we think if we do move into an El Nino. So these are hedging opportunities. These are attractive prices for what we know, the fundamentals. Even in the April report, it wasn't a bullish report. It was just less bearish.
All right. Now, you mentioned technical close at the end of the trading week on Thursday. Should planters get to rolling, looking at the technical signs, where could this market slide down to? Should we be looking on the D side of giving up 10, 12 cents?
Yeah, I think probably the downside objective is probably the same thing, stair steps. You take risk premium out of the market as the cards come out a little bit negative, and probably the first stoppage level is down around the 480 level on December corn. Then we'll see how things go from there. And I think that's a market that probably, if we start to roll over, is 2 steps down, 1 up.
Okay. All right. Well, let's take a look at soybeans. Probably a very different situation on the old crop side as we look at a 50-cent rally this week. Have we topped out?
Well, the soybean market is the one that really what we're trying to do is ration supplies. We've moved into contract highs on the old crop meal and soybeans. We're trying to ration supplies. We're trying to import soybeans. We're trying to keep that signal strong to import soybeans, try and cancel sales to China, roll stuff forward. We think that happened. This week it's quite possible that we have up to 20 million bushels of soybeans diverted from Brazil to the United States by China, some to the Pacific Northwest, some to the East Coast. So that's going to be good news if that in fact does take place. We've also so far we've brought in about 10 million bushels from Canada. That's probably going to continue. So the real goal of this market is to try and plug this tight situation that we have. Overall, the world is really going to be awash in soybeans come fall. So it's the rest of the world's trying to plug the U.S. tight situation now. And you have to bet that happens.
Now, on the South American standpoint, harvest is still progressing. We're pretty well in the gut shot of harvest now down there, I believe. Are they able to complete their exports sort of as needed, or are they facing port backups like we've seen in the past?
Yeah, they're having some logistics problems, but they've worked on that greatly from last year. But, their harvest, that's right, they're over 80% harvest in Brazil soybeans, 20% in Argentina, and the producers there recognize an opportunity when they see it. They're selling very aggressively, and, that's causing a wide basis down there. And what that really is doing, it's making the imports attractive. Soybeans in Paraguay are about $1.30, $1.40 cheaper than the U.S. FOB Gulf beans. So it's attractive, so it's doing its job. But the producers there are aggressive sellers.
All right. Now, you mentioned something that could be troubling to producers in America looking to plant record soybean acres. You said the world might be awash in soybeans by this fall. As we look at new crop, $12 cash is realizable in a lot of places in the country. Should folks be making some aggressive sales?
Well, we think so. We think it's an opportunity, and it's one that may not come along again, and it might. The grain markets are so dependent on weather, Mike, and we think it's going to be a fine growing season with the El Nino, but we think that probably there's $2.50 risk premium built into the market right at the present time on new crop soybeans. The old crop soybeans have pushed the new crop up. We've got about a $2.60 premium July over the November, so that's probably about as far as it can go. But we think that is very possible to believe the government's estimate that they came out in the Ag Forum of $9.60 for cash soybeans. So we think it's possible to go under $10. But it's on hold for right now, but it's starting to crack.
All right, and $12 is a lot better than we thought we were looking at the end of last growing season on soybeans.
Well, they're profitable levels, and the same thing for corn is profitable levels.
All right, well, let's take a look at the livestock market. We did see the June cattle contract pull back a little bit this week. We saw cash soften in a lot of places around the country. Where is this cattle market headed? Have we hit the peak for this year, do you think?
Yeah, we think we have. We think that, we traded cash as high as 155, 153 in volumes in the South. And usually we drop about 11% from the peak down to the summer lows. If you figure that out, that's about 137 on cash in the summer. Well, the June cattle are discounted by about $2, the August cattle by about $4. So the cattle market, we're anticipating that the cash market continues to move lower, but we've already got it discounted in the market at the present time. So the downside is probably limited. The upside through the summer is probably limited also, but we think product next week starts to move higher. Packers losing about $100 a head, so it's going to be a struggle.
They're going to need to see the values push up to continue to pay what they've been paying.
It's exactly right. It's in their benefit to try and push the product higher, and we think they'll start to try and do that next week.
All right. Now, if we look at this downtrend in the fat cattle side, compare that with the relative stable and, in fact, increasing run until this week on the feeder cattle side, where does that tell us this market is headed on the feeders?
Well, the feeder cattle supplies are just tight, and they're going to stay tight. So, probably significant downside pressure probably just doesn't happen. And I think we have to remember the technicals did turn soft this week on the feeder cattle, but the overall seasonalities on feeder cattle are actually positive from now until October. So it's usually a market that finds some strength once we hit some support zones.
Now, you mentioned we did have a technical close, a poor technical close again on the feeder cattle side. Where does that put us? What are we looking at as we start the week post-Easter?
Well, I think probably the downside is probably limited to another $2 to $3 down around the 176 area. I think is probably a good support zone, and probably find some buying interest down there. Just fundamentally, look at what the prices are at the sale barns.
And so that could tell us upside potential as we roll into next week if we get decent buyer potential. Technically, upside up above 180 again on feeder cattle?
Yeah, I think so, and I think it's going to partly depend on what corn does. And if we see the corn sitting there with just a huge fund long, if they start to liquidate, that's going to be supportive to the feeder market.
All right, now let's jump over to the hog market. Saw a bit of a gain this week, $3.60 back to the positive. What's happening in the hog market?
Yeah, the hog market's just a wild swinging market, and it's because nobody has a real good handle on it. The government's telling us that the supplies are going to be down about 3.3% for all of next year. The summer slaughter's going to be down somewhere 4 to 5%. Trade thinks it's going to be down more like 8 to 13%. So far, the slaughter the last few weeks has been down about 7%, but our weights are trying to compensate, so it's really only a total production only down 4%. So I think it's a market that we went from funds piled in, futures had a record premium to the cash, then we swung the other way as they liquidated a record discount to the futures. And I think this is a market that probably overall, when we sort it out, is one that rallies are going to be meant to be sold.
All right, we'll continue the hog discussion in the Market Plus segment on our website. But Don, thanks so much for taking the time to be with us this weekend.
Thank you, Mike.
That wraps up this edition of Market to Market. But Don and I will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us again next week when we'll learn how farmers are growing food year-round in the heart of the Windy City. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.